Good evening, everybody. I am Black J for Forex, and tonight I'll be teaching on something very, very, very profound. Right? I would call it key levels to avoid and the key levels to take. Key levels, key levels to avoid, and the ones to take. Uh, I'll be teaching on key level to avoid and the ones to take. Now, some persons are making losses. They don't even know the reason why they are making losses. They think that because they see a key level, that the key level will hold, but that's not true. Because you see a key level doesn't mean the key level will hold. Because you see a key level doesn't mean the key level will hold. Now, how would you know the key levels to hold and the ones not to hold? Let me start with the one that will hold. Now, this is my own idea. So I will not want anybody to come and meet me and tell me that this forex method own is not like this, or this forex method is not teaching like this. No, don't do that. I have to simplify my own in a way that it will give me more win rate. So what I'll be teaching you guys right now, is my own edge in key level. I'm not saying that I started key level, but I had to find out what will work out for me. Now, for those of you that are joining for the first time, kindly go watch the video on YouTube, right? And check out the video on key levels, right? After watching the video on key level, the next video you want to watch is what's it called? Key level confirmation. After watching key level confirmation, go and watch key level inverse. That's inverse key level. Watch that one third, then before coming to continue this video. Now, if you've not subscribed to my YouTube channel, kindly subscribe to my YouTube channel so that any single time I drop what's it called, a video, you get notified, right? Now I am putting out this content for free. At least tell you, it's not possible for you to be a forex trader and you not have up to like 5 persons in your cycle, right, that are into forex. You may not have up to like 5 persons that you know that are into forex. So if one person from this call is referring 5 persons to my YouTube channel, it will help the YouTube channel to grow. So we are currently on 198 subscribers. Let's get it to 1K subscribers before the end of this year. In as much as Black Jeff is helping you guys grow, also help Black Jeff grow. So you guys will be like, I was with him in the beginning, in the days of his early beginning. So you guys, this is one of the ways to be part of the early beginning, by supporting and subscribing and liking my videos, sharing my videos to your friends and stuff. All right. Now, the key levels to avoid. Key levels to avoid. Key levels to avoid. Now, the reason why a lot of persons are making losses is because, please do not annotate on my screen. Don't do that, please. The reason why the reason why some persons, right, are making losses It's not because they don't know key level. It's just simply because they don't know they want to avoid and they want to take. Now, it's not all key levels I take. There are some I avoid. Now, the very first type of key level I want to talk about that you should avoid is key level that is formed in a consolidating market. When the market is moving like sideways, if market is moving like this, okay, no, let me never do this. Let me delete this. Let me do something like this. Let's assume the market initially was moving like this. Let's assume the market was moving like this initially, right? It was trending, right? And you've been using key level, and all of a sudden it start moving sideways like this. Start moving sideways like this. This is the kind of key level to avoid. That is, the market is now moving sideways. This is the kind of key level to avoid. Now, when you say the market is moving sideways, how would you know a sideways market? If you draw a box on it, everything is inside the box. Now, if you try to draw a box on this trending market now, you will see that it is not inside the box. It broke past the box. But if you draw a box on it, it will just be moving sideways. This is how to know a sideways market. When you draw a box on it, everything will just be inside the box. This is a sideways market. So whenever a key level is formed in a sideways market, avoid it. This is the number one reason why people are making so many losses trading key levels. They are trading key levels in a sideways market. Now, even for those of you that are not this one, for those of you that are in my boss channel, right? The person said something. She said, I cannot trade V25 because it is currently consolidating. If you check V25 now, you will see that it has been consolidating. So there is nothing to trade here on V25 because it is consolidating here. Then if you put another box again here, it is also consolidating. So there is literally nothing to trade on V25 before. But now that it has broken below the box, you can now start finding key levels. Not inside the box, so outside of the box. So the next level that will be formed from here downwards is tradable. So one of the ways to avoid losses, I know many of you here must have eaten losses from this V25 because you are just trying to find key level inside this consolidating market and it is wrong. Please, I want to be sure. Can somebody see hear me and can you see my screen?
Yes, sir. I can hear you and I can see your
Yeah, we
screen.
can hear you.
All right, thank you very much. All right. Now, the next thing you want to talk about is the case of this guy. That's number one. The kind of key level to avoid. Number one, avoid a consolidating key level. A key level that is formed while the market is consolidating, avoid it. Now, number two type of key level to avoid is overlapping key level. Number two type of key level to avoid is overlapping key level. Now, what is this overlapping key level? And overlap, see, all of these things I'm just giving it a name. I'm just calling it, just the name just came to my head right now. I'm just forming a name for it. I don't want to just show you guys. I just want to give it a name. Overlapping key level. Avoid overlapping key level. Yes, please. There is something some persons do that I am not cool with. Let me just say it here. Now, after teaching a video like this free of charge and posting it on YouTube for people to go and watch, some persons will still come to my DM and be asking me to mentor them for free. Abba, it's not right now. It's not right that I will put out content like this that people are paying for. There are people that are paying $500 for my course on what I'm teaching you guys right now, but I'm putting it out for free. So persons will still come and be telling me to teach them extra class for free. Please, I don't do that. If you want to get my course, let me just say it here. I have two types of mentorship, right? Now, the very first type of mentorship I have is a one-on-one mentorship. Currently, I am not doing group mentorship. I'm just doing a one-on-one mentorship. That is, we're going to be having class twice in a week, right? And I'm going to be explaining the forex market to you in a way you will understand. If it means me speaking Hausa or speaking French for you to understand, I will speak French or Hausa or Spanish or Italian for you to understand. I'm joking, no. But what I'm trying to say is, I will speak it in a way, I will teach you in a way you will understand, right? And I'm going to be guiding you on how I trade. So it's a one-on-one class, and each of my classes will be recorded and be sent in a group for you and I, because I'm going to create a group for you and I that I will be dropping the classes, that a live class I will be having. That package is for $200. Now I have another package that is for $500. It is still the same one-on-one mentorship, but this one, why the reason why there is additional $300 to this particular one is because of the fact that you will be seeing me trade live every single day. I will call you, I will send a link to you 7 a.m. Nigerian time, and we will look at different pairs that very day. So if we have like 3 pairs in a day that we're going to trade that day on a Monday, I'm going to send it to you. And we're going to do this every single day for 3 months. Now, I always tell people that I always advise people to go for this private mentorship, which is $500. That is the case whereby after getting the one-on-one mentorship, you will be seeing me trade live every single day. It's just like a mechanic or a stylist that the tutor is telling the student that, okay, using words of maths, do it this way, do it this way, do it this way, do it this way, right? That one is simply like what is really happening in the $200 course. It's going to take you time because you're going to be figuring out things yourself. I'll just teach you and you'll be figuring things out yourself. Why the other case of the $500, you'll be seeing me trade live every single day for 3 months. Now, if you do that, it's not possible for you not to be profitable in your first 2 months, not 2 months, 2 weeks with me. In your first 2 weeks with me, there's some of my students that are here that are in a private group that are making money crazily because of the fact that they are seeing me trade live every single day. And whenever they have a trade setup, they also tell me that, okay, I'm having this trade setup. What do you think about it? Share your idea about it. We can go live and I will explain each to them every single day for a period of 3 months. That's why that one is for $500. Right? All right. Now let me move on. Now, the second type of key levels to avoid, right, is called the overlapping key level. The second type of key levels to avoid is called the overlapping key level. Now, if you want to reach out to me, right, you can reach out to me maybe via YouTube or anywhere, but I think I don't just call my line. My line is my active WhatsApp number is +234 8060531771. I'll come again, +234 8060531771. All right. Now, the second type of key level to avoid is called the overlapping key level. Now, why do I call it the overlapping key level? Okay, let me say the second type of key level that Black Jeff avoid. Let me not say, so it not look like a general term. The second type of key level that blackjack always avoid is called the overlapping key level. What do I mean by overlapping key level? An overlapping key level, okay, now let me use this one. Let me use this one. Let me use this. There's a key level here. Look at this key level now. Let me take this as a key level. Let me use this guy. This guy has a key level, right? This guy has a key level. Now, if you check, you know how to draw your box on key level. The two equal points of the key level to the highest point, or maybe weak by body of the key level above here, right? The reason why I'm talking like this because I've already explained key levels in past videos. So you can go watch, I think one of the first videos I uploaded on YouTube is on key levels. You can go back and watch it. This is like the advanced part of key level. Now, this is the key level we have here. This is the key level that we have here, this guy here. Now, have you noticed that this kind of key level is called a single key level? This type of key level is called a single key level. This is an example of a single key level. That is, there is no other key level inside the box. There is no other key level inside the box. Now, an example of an overlapping key level is a key level that has another key level inside of it. That is an overlapping key level. That kind of key level, you should avoid it. A very good example is this one here. Okay, this one has only one. Okay, this one has only one inside of it. Let me find the one that has two key levels inside of it. Yes, perfect. This is an example of overlapping key level. Let me take this one back. Yes, perfect. Now look at the one I'm taking. I want to show you guys an example of overlapping key level. And this type of key level you avoid. This is the reason why many people have been making losses. Now, as the market is coming down, right? As it is retracing back up, the one you need to get to first is this one. This is the key level to get to first before this second key level. Now, are you seeing that you are marking this guy as a key level? This is the one you're marking as a key level, but there is another key level inside of it. There's this song, inside that your Ivia, another Ivia dey inside. So the kind of key level to avoid is the key level that has a key level inside of it. Now look at, I know many of you here, your eyes have never been open to this thing before. I am just opening your eyes to see it. So wherever you are, just say thank you, Jesus. Omo. Or your thought has never come to like, how did this guy know this thing? How did I know this thing? I knew it by the help of the Holy Spirit and by loss. I made a loss and the Holy Spirit opened my eyes to see it. As I got to know it. Now, this is the thing. Look at this key level. Look at this one I showed you here. Look at. This guy is a single key level. There is nothing inside of it. So just a single key level. No other key level was inside of it. So this was the only guy there. So just this guy that formed the key level. But you take a key level from here, another key level is inside of it again. So what will you do in this kind of situation? Since there's an overlapping key level, you will now have to adjust it to this one that has its only self as a key level and forget about that one. This is one you have to take. You have to take just this guy. This is the one you have to take. Perfect. Are you seeing that the market came to a tap on this one that is single and is pushing downward? Not on this one. This is not the one the market is reacting to. It is this one. Now, in this key level, it is a single key level. It did not have another key level inside of it. Now, if you have a double key level like this, that is this one you are taking here, this one you are taking here, this particular key level you are taking, this particular key level, and there is another key level inside of it, this one automatically is not valid anymore. You will have to go for the one that has a single key level, which is this one. That's why the market came to tap into it and is pushing downward. In many cases like this, it has a double key level, right? And there's no key level that is standing on its own. There are cases, okay, now look at, there are cases that this particular guy, this particular key level here, we have this key level inside of it. And inside this key level, there will be another one inside of it again. You have to avoid it. That was what happened on GBPUSD. Let me show you guys. Let me go to GBPUSD. I'm giving you guys value, premium value. Wow, perfect. I'm gonna take gold for a buy. I'm gonna show you guys live. Or I'm gonna analyze the chart for you guys live. And I must make profit. I must make profit from it. Must. Whether the devil likes it or yes, I must make profit from it. Gold has been one of my favorite pairs these days. I've been chopping gold back to back. Alright, great beating pounds. Let me come to 1 hour time frame. Now, look at this gold now. Look at, of all places, this gold, look at, from all these points here, it came to react from this point before pushing to the upside. Why did gold come to, and why did GBPUSD come all the way down to react from here? Why here? Why of all places? Why here? Why? And when there are other key levels above that it didn't work out from. Let me tell you guys the reason why. Now, where is the first point we have a key level? Okay, I'll get there. Number 3. Let me write it down before I forget it. Number 3, kind of key level, right? Sorry, let me explain this second before I go to number 3 type of key level. Now, if you check now, the market has pushed up, right? Now, how will you now know the one to take? I said that you should always take the recent key level. I said the recent key level is the one that, as it is retracing, which one will it get to first? So let's start finding that it has got to this all-time high, this high, sorry, not all-time high, this high, and it is retracing. Which key level will it get to first? This one. Boom, 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 boom. This is the key level to get to first. This one here is the key level it will get to first. Look at this one here. This is the key level it will get to first. Now let's put a box on it, covering the high and the bottom. Are you seeing that inside this key level, there's another key level inside again, which is here, which is at the bottom here. So if you decide to take that one at the bottom, there's another key level inside of it again. It's crazy. So you always have to avoid a key level that has another key level inside. You have to find the one that is just on its own. So this one and this one cannot hold. Now let's now proceed to this next one here. This one here has a key level inside of it again. It has a key level inside of it. Now let's now adjust it to the one inside of it now. This one, this key level inside of it has another key level inside of it again. So let's now adjust it to the one inside of it again. It's also looking like it's having another key level inside of it again. So whenever you have a key level that has a key level inside of it, it can never hold. You have to start finding a key level that is on its own. So after doing many of those research, this was the only key level on this GBP that didn't have a key level inside of it. Look at, the market just came down. The market just came down, tap on it, and is pushing to the upside. That is how this guy played out, pushing to the upside. A key level that has a key level inside does not have a key level itself. A single key level is the one that we always hold. The one that has a double key level can never hold. That's number two. Number three type of key level that we never hold, right? This one is 70% of the time it will not hold. 30% of the time it will hold. This type of key level is called a mitigated key level. Whenever a key level is mitigated, it will likely not hold again. Whenever a key level is mitigated, it will likely not hold. A very good example is one that happened here. There's a key level here. Look at this key level now. Okay, let me first of all delete this guy here. Are you guys gaining value? Are you guys getting value? Hello?
Yes, sir. Yes,
All
sir.
right. All right. Look at, there's a key level
Yes,
here.
sir.
Look at, there's a key level here. I'm opening your eyes to show you guys the reason why you guys have been making losses. I don't want you guys to make losses. I have good art. People will take advantage of it. But no more. I don't take advantage of my good art in Jesus' name. Ah, maybe one white man will just tell me that I don't want to be calling Holy Spirit or Jesus in your recording. I will give you 50 trillion dollars. I'll be like, to hell with your 50 trillion dollars. With Jesus, I have everything. All right, I think they say they offer Kaisen same thing and it turned them down. Same me, I will turn them down. So this guy here, we have these two equal high as a key level. Now, are you seeing that the market, now let's form a box on, let's put a box on it, on these two guys here. Let me trace it back down. Are you seeing that the market move up? It came to tap on the key level. This is resistance becomes support, ROBS. It tap on it and it pushed to the upside. Now, as the market is retracing, there's still a key level there. Now, the key level now changed to this one above. Yes, it then changed to this one above, and this was now the TP. Now look at the market tap on it and it pushed to the upside. Let's see the risk to reward they gave. Taking 50% of the long candle. It gave 5 risks to reward. Now, after giving 5 risks to reward, as it is coming back down, that key level now, mitigation means that market has tapped on it and has moved from it. That is mitigation. That is, you have a key level now or a zone, right? The market, like this one, the process of this market tapping into the zone and moving away from it, that is mitigation. So the kind of key level to avoid is a mitigated key level. That is, this key level has already held, and as it's coming back down, you are expecting it to still hold. You are chopping your stop loss. It's chopping your stop loss. That's why it is good to break even after a trade has given you 1:3. I said that at the initial part of the class. So a mitigated key level can never hold. So these are the three types of key level that does not hold. Number 4 type of key level that will not hold is a key level that is not showing on 2 time frames. The reason why I'm saying this is because it's something I've already taught TLS, people in TLS before. I've taught TLS 1, I've taught TLS 2, I've said it in TLS 1 and TLS 2. The fourth type of key level that we not hold is a key level that is not showing on 2 time frames based on black jeff. Oh, please, oh, please, oh, based on black jeff. I don't want anybody to come and tag me and said, your mentor said this, you are saying this. I'm telling you, this is my own edge, my own strategy. This is my own edge, no, my own strategy. Let me go and be watching gold so I can take a trade on it. Now, the fourth type of key level that we know hold is the key level that has, what is it called? That does not appear on 2 time frames. Now, what do I mean by it does not appear on 2 time frames? I told you guys one time, for those of you in TLS, I think TLS 2, so in TLS 2 I said it here, that your key level should appear on 2 time frames, either on H1 and H2 or H1 and H4. Now look at this, I'm taking this exact point here, as my key level, this exact point here as my key level on H1. Now if I switch to H2, is that, so look at on H2, that same exact point I mark on H1 is still showing on H2. That same exact point I marked on H1 is still showing on H2. Look at, it's still showing on H2. It's showing on 2 time frames. That's already a confirmation to me that okay, this key level we hold. So the number number four type of key level that we not hold based on black jeff or forex, which is me, is the key level that does not appear on 2 time frame. If it doesn't appear on 2 time frames, I don't trade it. Remember I told you guys about me using consistency, that I am very consistent in what I am doing. So it must appear on 2 time frames before I can take it on the same spot. There are cases whereby, let me do something like this. Let me show you guys something. There are cases whereby on H1 time frame, you are getting these two equal high as your key level, right? But when you now move to H2, your POI box can either extend or reduce. It will not be on the same spot again. That is not a valid key level to me. So this key level, look at now, this same exact high I am marking, this same exact resistance. Okay, now this is the way to know. The key level to avoid is the key level that does not have the same resistance or the same support in 2 time frames. If you look at this same exact resistance I am marking, this same exact resistance to a body of this candle is the same thing on H2 time frame. That, see, I did not change it, I just really change time frame. Is the same exact resistance there. That will tell me that this key level will hold. So I'm expecting that by morning, maybe 7 a.m., my people on what's it called, my private mentorship, they know how to take this trade. They know how, because I've taught them some secrets that I will never share anywhere unless you pay me that $500 before I can share it with you. So that's what they pay for. They know exactly where to enter from and where not to enter. They know how to avoid it, the key level to avoid again. But there are other things, there are other types of key levels to avoid, but I will not go details into those ones. I will reserve those ones for my private mentees, not even my mentees, not even the people that are paying $200 for the 1-on-1 mentorship. I will reserve those ones for my private mentees that are paying $500. The other information, yeah. So this is the type of key level to avoid. Now, what are the key levels to take? the key levels to take. Number one, it must appear on 2 time frames, like I just said here now. It must appear on 2 time frames. That same exact spot that is showing on your resistance on H1, let that same spot be showing on H2. It can be crazy that it will be showing on H4, okay, it's not showing on H4. But let it be showing on at least 2 time frames for confirmation. Let me find one example for you guys. Let me use here for example now. Look at, let me take this guy. There's a key level here. Let me take this guy as a key level on H1 time frame. I want to show you guys something. Look at, I'm taking this resistance as a key level. Let me switch to H2. And you see that on H2, there is no key level there on H2, on that box. That's how crazy it can be. Now, if you move to H1, you will see a key level. Look at the key level here. You see a key level here. If you then move to H2, that same box, oh, look at, there's no key level there on H2. So this is the kind of key level I avoid. According to Black Jeff, oh, I avoid this kind of key level because of consistency and high profitability. I avoid this type of key level. I focus on this one that is showing on 2 time frames. Now, the one to take is the opposite of the ones to avoid. Number one, it must be a single key level. It is not, look at this guy, it's not really overlapping. It must be a single key level. It is not overlapping. Look at my H2. It is not, there is no other key level inside of it. So this key level we hold. Number two is it must be unmitigated. Look at this guy, is unmitigated. Number three, what's it called? It must not be overlapping. It must be unmitigated. It must be showing on 2 time frames. So these are the ones to take. Now, how will you now enter this market after seeing it on 2 time frames? Now, you will go on your 5 minutes, wait for the market to come into your POI. Can be anywhere in the POI. Once you see your reversal candle pattern, take your trade. So your reversal candle pattern can be inside the 1 hour POI or outside of it, anywhere. So confirmation candle states that this one I've already taught on YouTube already, but I will not go details on how to enter key level on your this thing. But just know that once the market enter into your, what's it called, your POI, find an reversal candle pattern. And I think in the last video I explained the 2 type of reversal candle pattern I use. That is your candle confirmation pattern, which is your Arami and your bullish and your engulf candle, your Arami candle and your engulf candle. So kindly go to my previous video on YouTube and check it out. So that is what this guy do. So once this guy come inside of here now, give you guys free live trade. Once this guy come inside of here now, do not just enter. Wait for a reversal candle pattern. Let's say you get a reversal candle pattern here, then you can take a buy here. You can take a buy from here. Immediately the reversal candle pattern is formed, take a buy, put your stop. I already told you guys how to set stop loss if the stop loss is very far, if it's the key level is wide. Take 50% of the key level and you can extend it to this eye here. So you see that this guy is almost giving 5 risk to reward. Coming back to the eye of it, it's almost giving 5 risk to reward. 4.77. That's a good risk to reward. Risking $10, you're making more than $40. You're making $47. So I just shared the trade setup with you guys. So this is the kind of key level to avoid and the kind of key level to take. If you want to know further about the precision entry and everything, you will have to sign up for my private mentorship, which is for $500. I'm not exaggerating here. I am the person that is giving the most cheapest and quality course I know so far in the space of Forex. There is no Forex mentor that is highly profitable, that we have a one-on-one class for $200. Go and find the person and let me know the person. A one-on-one class, not a group class, oh, a one-on-one class for $200. And there is no mentor I have seen that will be trading live every single day with his community for as low as $500. I'll be showing them as how he executes his trade and everything. So in the forex space, I am one of the cheapest. I have the cheapest cost to have and the most profitable and what's it called? Most profitable course you can get. There is no forex method that will organize a one-on-one class. I know somebody that charge up to like $5,000 for a one-on-one class, and the person will not still show you how he or she executes trades. All right. So let me leave this session for question and answer. Like I said again, if you want my one-on-one mentorship, that's for $200. Then if you want to be seeing me trade live, how I execute a trade and everything with the mentorship, that is for $500. But if you think you already know the way I trade based on what you've watched on YouTube or I have taught you from TLS, and you think you already know how I trade, and you want to be watching me trade live every single day, you can just pay $300 for that one. But if you don't know how I trade and you want to learn how I trade and want to be watching me trade live every single day, right? Just you pay 500 for that. Or if you just want only the mentorship, you're gonna pay just $200 for that. So just depend on what you want. All right. Let me leave this question for question and answer before we call it a night.
Thank you for the class, Black Jeff. Really appreciate you. It's been awesome so far. So please, can you check GU? I wanted to ask a question there.
All right, I'm coming, sir. GU. All right, G. I'm on GU now.
All right, sir. Thank you, sir.
So
Yeah. Okay. So for this current buy that is happening,
yep.
like this, I don't know. Okay, let me annotate and I can remove it. This one that happened. Why did the buy happen? Because we price only created an IDM. I didn't see any valid um disruption that price took out for that buy.
All right. So what we have to do is to do another. We have to analyze the chart again and show you how the buy started. You have to do a top-down analysis again. I'll show you how the buy started.
Okay, I appreciate that, sir.
All right. So all right. Based on the current trend on H1 time frame, we mark our structure from H1 time frame. Now
Yeah.
on H1 time frame, we have this structure on H1 time frame. We have this structure on H1 time frame. Here being our inducements, which got taken out. Here being our disruption, which was also taken out. Then we have our external right here. This was our external. So the market was literally buying from an external, liquidity. That's what the market was literally buying from an external liquidity. So this is what we have. This guy is our H41 leg, because this is the most recent break of structure on H4 time frame. So this is our most recent one leg. So this market is currently, an inducement was taken out, a disruption was taken out, the market came to an external and started buying from an external. That was the reason why we have to start looking for key level on H4 time frame. Sorry, on what's it called? On H1 time frame. So start finding key level on H1 until we got this one, and this was the one that held, push it to the upside.
Okay, sir. So right now we're still bullish on GU.
Now, currently on GU, is GU still bullish? Now, GU is still bullish. Now, there's something called currency correlation. I don't know if you guys have heard this thing before. There's something called currency correlation. Now, GBPUSD, Euro USD. Now, those pairs, look at now. You know we have. I want to show you guys something now. Currency correlation. When we have GBPUSD, we also have um um U USD USD, let's say USD JPY. I'm thinking of a particular pair to use. There's a particular pair I do use before, I've forgotten. USD JPY. Do you notice that on GBP USD, USD is coming second? Then on USD JPY, USD is coming first. The reason I'm saying it this way, one is base, one is quotes. I don't want to start saying some things. I don't know who is newbie here. I don't want to confuse anybody. So let me just say it in a local way that everybody will understand. Now on GBP USD, GBP USD is coming second later. Then on USD JPY, USD is coming first. Now, there's something called currency correlation. Based on what I have learned, that if the pair that USD is coming second is buying, the pair that USD is coming first will be selling. I don't know if you heard of this before. If the pair like GBP now, if GBP is buying, people are expecting that those pairs before, that those pairs that are coming after USD should be selling. So it's the opposite of it. Now, if those pairs that are before USD, if those pairs that are after USD, sorry, if those pairs that are before USD, which is like GBP Euro USD, someone said that they are all selling. If one is selling, the other will be selling. If GBP is selling, Euro USD will be selling, NZD USD will be selling, AUD USD will be selling. Yes, a very good example. The opposite is USD card. Yes. Go and find, make you find this. If GBP Euro USD are buying, USD card will be selling. All right. So if you want to know if this guy is bullish, you have to check Euro. What is Euro doing? You're not trading Euro. You're not trading NZD. You just have to check, what is this guy doing? Is Euro bullish? What is this guy doing? That's what you're checking out for. Are you getting my point?
Yes, sir, I am.
All right. So that is how you know. So now, if let's now check now, is GBP USD bullish? To me, I will say it is bullish. It is still bullish. The reason why I don't like GU is because it has a very crazy mood swing. So I just allow it do its thing. When it is done doing its thing, I will take my trade on it. There's nothing that is happening on GU currently. There's no key level here. They want to come and react from. So for me, I would say GU is still bullish. For me, I would say GU is still bullish. I don't see any reason why GU will be selling now. I've not seen any structure that will make GU to sell. So I'll say GU is still bullish. Is there any other question?
All right, sir. Thank you so much.
Thank you, sir. Is there any other question? Well, we've taken plenty hours here, 1 hour 20 minutes, over 2 hours on this call. Is there any other question before we call it a night?
Yes, I have a question.
All right, please. We'll be finishing this call in the next 10 minutes. So try your possible best to ask your question very fast. I will finish in 10 minutes. So if you don't ask your question between now to 10 minutes, it will be till another time. We have a live class, a live session again. Please ask your question.
Yes, Blackjet, thank you. I just wanted you to reiterate on the when you have a key level at when market is ranging or consolidating. Are you saying immediately it breaks out any key level after that breakout, or a key level maybe before it breaks out? If you understand my question. For example, now VIX 25, it was ranging for a bit, then it broke out. Are we going to be looking for a key level like after the
Yes,
zone?
after the zone, yes, after the breakout. Let me show you now.
Okay, thank you.
If you check now, this guy was consolidating here, which I just showed you guys now. It was consolidating here at first. After consolidating here, it was also consolidating here. So me, even if there's a key level that is inside this box, I will not take it.
Yeah.
I will rather
Okay.
wait for the market to do from this key level, yeah, they come and break structure like this. So it
Okay.
is from this next one I will start taking.
Okay.
Yes.
Okay. Thank you.
Yes, sir.
Thank you.
Any other question? Is there any other question? It's like everybody understood this class, and I'm very happy for that. Now, before I stop to next class, let me quickly say something. Now, for those of you that someone said something that really touched me, that he made loss trying to, I think that was Louis, I forgot the person. I tried to buy a particular pair, he made a loss on it, tried to sell, he made a loss on it and stuff. Now, I'll tell you how to use inverse key level effectively. You have an uptrend that is playing out, a key level of an uptrend that is playing out, right? And it finally failed, right? Now, because a buy key level has failed, see, I'm giving you guys wisdom. You guys have never heard this from anywhere. Now, because a buy key level has failed, right? You start taking the inverse. See, it is no wisdom to take the immediate inverse. Wait for that immediate inverse to play out first to be sure that it wants to start selling. Then once e give you another key level again, it is the second key level you'll be taking. So you don't always take the initials, you always take from the second key level. That is, if you are having a buy key level and the most recent buy key level failed, you are supposed to start selling immediately based on inverse. Blackjet for Forex is telling you, do not sell immediately from inverse. Allow a key level to first play out first. With that inverse, you are not taking it, you are just watching it, let it play out first before you now take the second one. The reason why you are letting that play first, you are testing the waters. Okay, you don't want to use your money to test, you are using your eyes, your back testing to check, is this guy really going to sell because a buy key level has failed? If that buy key level has failed, wait for the first key level to play out first before you start taking it with the second one. So that will be all for tonight. In the absence of no other question, that will be all for tonight. So I will drop the video on YouTube, and what's it called, that will be all. Now, if you know you got value, right, if you know you got value, just kindly come to my DM on Telegram and give me a review of the class. If you know you got value, kindly come to my what's it called, DM on Telegram, and give a honest, not, don't lie, don't exaggerate, don't hype, give a honest review of the class. I'm not saying you should not. I'm not saying you should not be in. I'm not saying you should not be in. You should not be in detail though. Just give a honest review of the class.